All right, so guys, we can teach you things on voice, but literally, you're getting 10% of the information if you just listen to us. You can get way more information by just reading the books. Now, you have to remember, we put a lot of effort into this. We've been here for like over 3 years, maybe going on to 4 at this point. Um, and we put a lot of effort into the new traders program, into knowledge is power, like all of the training channels. I think we have like the most amount of knowledge in this group, and it's just like a whole collection of it. I know it's not in order, and that's because like we had to compile all this, right? Now if someone wants to go and put things in order, just give me a, just PM me. I can definitely um go through it with you, and or you can go through it and then I can make the adjustments, and we can create a new channel where it'll be more structured. But you have to remember, when the group started, we're trading too. We don't make money for making calls. We're not a furu. We make money by trading. So most of the time we invest our time into trading, sharing our trades, and studying, right? So at a on a constant basis, we're all studying. And one thing you guys have to remember is Google is your friend. Before you ask any questions, just do me a favor and do three things. One, make sure that you read the New Traders program, Knowledge is Power, and Soya's Ultimate Newbie Guide. I would say go with Soya's Ultimate Newbie Guide if you're like brand new into trading. If you have some experience, the New Traders program will teach you a little bit more, just to like kind of get you like the base level skills that you do require. Now, some stuff are gonna speak to you louder than others. So just scroll past the stuff that you already know. Once you're done that, and if you have a question, guys, just Google it. You'll find the answer and you'll find way more perspectives. Remember, when we're trading our strategies, stuff that we've done. It does not necessarily mean it's going to work for you. If that was the case, guys, just think about it logically. Think about it logically, guys. If people can make money following calls, why do banks have funds? Why are there hedge funds? If it's so easy to make money that you can listen to someone and be like, hey, buy this at there, put a stop loss over here, everyone would be doing it. You always have to remember that simple fact, right? Now, the reason I asked how many of you guys ran a successful business is because this is like a business. You have to put in the effort. You have to be your own compliance officer. You have to be your own HR. You have to be your own boss, right? You have to be your own investor. Secondly, how many years have you been trading? So I see a lot of people have trading in the first 3 years. And I'll tell you, the first 2 years is where you're probably going to take the majority of your losses. But if you blow up your capital, are you going to last for 2 years? Like, what is the entire goal here? If you're going to be putting in 12 hours a day for the next, year or so, right? There's 252 trading days. So if you're gonna be trading for that many days, and then you're gonna do, like your homework and study, you're gonna have a trading journal, you're gonna have a pre-market watch list. All of that stuff requires capital. If you don't have that, you're not gonna go anywhere, and it's not really gonna do any good for you, right? So always remember that, like, read those books first, please, because I've learned a lot. Like, I come from a fundamental background. Okay, I worked in finance. I understand the fundamentals behind it, and to be honest, technicals wasn't something that I knew. When I you know started doing this on my own, it was mostly just investing. I'd find some deals and I'd like hold on to it. It'll be swing trades. Most of them weren't like profitable right away. I'd say like 60% went against me, and then it finally came up. And that was because of poor technical skills. The moment I realized that this was an issue, I just dove down into a couple books. And if you scroll all the way up on the New Traders program, I posted the books that have worked for me. So the first one is Visual Guide to Candlestick Charting. I really love that book because I'm really analytical. So I don't want to just know, oh, if this happens, it goes up. That's useless information. I want to see why it's going up, what's causing it, stuff like that. Now, that book is like your Bible. If you're a technical trader, that book will teach you a lot of stuff. There are some people that will recommend like the Steve Nielsen's book, and because he is like technically like the guy that brought candlestick patterns to America, right? Now, I personally like the Bloomberg one. I don't know. Remember, like Bloomberg is like the leader in data, right? If anyone can write a book about data, it has to be them. They have all the data they need, right? So I applied that logic and read that book first. Secondly, it's the Anna Cooling's book. That one really helped me. What is it called again? Visual Guide. No, what's it called again? Something volume price analysis. Complete Guide to Volume Price Analysis or something like that. And then after that, I read several books, probably like close to like 100 different books. But I'll tell you, like those two books made the biggest difference in my like technical skills. Complete Guide to Price Analysis. There we go. Okay. Now, please read those books at least. If you're a new trader, you want to do this for a living, you have to really sit yourself down. Look yourself in the mirror. It's like, okay, am I going to be putting in this kind of hours? It's not easy. There's a lot of sacrifices you have to make, and that's a decision you have to make yourself, right? And then the next thing too. Well, one more thing. So I can see here that 16 people have a background in finance or education in finance. Good. The other 47 don't. So just think about swing trades. You're buying it because you think it's a good price, right? That's the entire concept of swing trading. You're buying it at a price because you think it's going to go up, right? So if you're the 47 people that said no, right? And if you don't have a background in accounting, in knowing valuations, if you can't forecast anything, do you really have an edge? Like you do have to really look at it this way. I know everyone loves swing trading. I love swing trading. Is this the marketplace for that? No, we're in a bear market. Buying onto positions is not a good idea. That's I've mentioned it too. Why people wanted to chase Boeing at 160s, and I was like, guys, don't do it. I liked it at 100s. I'm not gonna like it at 160s. It's 60% up in like 2 weeks. So, what's the easiest way to know if news is priced in? The most simplest way. Let's say Boeing has a $1 billion contract. Okay, let's say some news came out. They just got awarded a $1 billion contract. And let me actually quickly find the stats. All right, so someone write this down. So Boeing has outstanding shares of 564,226,000. All right, so think about this logically, right? So let's say Boeing, for example, on this, they have close to like 65 million shares, sorry, 650 million shares, right? Sorry, 564. Let's just go with 564. If they get a $1 billion contract, how much should it go up by? Market cap is like the easiest valuation, by the way. It's what everyone uses because it's the most simplest way to see how much they're currently worth based on the market. The reason people use market cap as a kind of like a valuation metric, it's not the best one, but it's like the easiest one to look at. is because of the simple fact that in this marketplace, you are up against guys with PhDs in economics. You're up against data that you can't even afford. There are people with so much data that cost millions of dollars and there's people with inside information. There's people that have worked and build relationships with other firms um, that know what other companies are doing, right? There isn't a lot of Ivy League schools that teaches, actually there is every single university has a business program pretty much, but there's select few Ivy League ones where they're going to be hired in the biggest companies and taking on the biggest roles, like right out of university. It's like that. It's so simple. Um, these guys obviously have a network. Maybe they're in a frat together. Who knows? But they'll talk to one another and they'll pitch ideas. They'll talk to one another and pretty much just tell them what their firm is looking at. If they're bullish on something versus the other guy, now that's a competitive edge that they have. Another competitive edge, and the reason why everyone uses Bloomberg Terminal, is because they have a messaging service. It's like BBM, but it's pretty much with anyone that's a professional trader, right? Now, there's a lot of noise. It's like StockTwits, to be honest. You're going to get a lot of plays that actually aren't the um, actual, like, it's not something that you actually want to trade. They're probably going to tell you to do the opposite of what they're actually doing. But within those groups, you meet some nice people, you meet some good people, you kind of build a relationship. And then guess what happens? You start a little group again. And in that little group, you have people you trust, and they're going to be trading and front running plays before anyone else knows, right? And it's the same mentality as you retail traders, it just in a more professional scale. Now, these private groups, they can actually move markets. We can't. We don't have an advantage in that, but that's their edge. So if you're swing trading and you have no skill in fundamental analysis, you don't know what a valuation is, how do you know it's a good price? You technically don't, right? So what a lot of people do is they resort to technical trading because it actually works, right? Technical trading is just going to tell you pretty much what has happened in the past based on price action, right? Now, the most important factor of that is you're using these brilliant minds with all of their skill sets, with all of their knowledge, their networking, they're making plays in real time, and you're just watching it a little bit delayed, but at least you get to see it. You get to see where the move is going. You get to see what kind of like formation it is. Is people loading up? Is this a distribution zone? A you know price discovery zone? Is this a resistance level? You can see all of that, right? You can clearly see it when you do technical trading. But you have to remember, you don't have an edge like they do. They're always going to be a step ahead. So I think one of the most important things is first you have to accept that. If you're going to be swing trading, I don't get into a swing trade without knowing what's going on a swing trade. Like I know that I can lose 20%. If I'm trading a mid cap, someone write this down. If I'm trading a mid cap, I know I can lose 20 to 25%. If I'm trading a large cap, about 10%. If I'm trading a high ATR stock, let's say over $7 a share, I could probably lose about 10 to 15%. So if I know all this, what do you do? Do you go all in on a play? No, and I'm not even going to bring up small caps because I don't think you guys should be even investing in it. I know Warren Buffett, all the great ones, Peter Lynch, they all started with trading penny stocks, but they also started in a time frame when there weren't this many traders, when information was not readily available. Peter Lynch, he has an advantage. He worked at the exchange. He has connections. Do you guys have connections? If you don't, then you don't have to write that down as an answer. But you know, um, if you don't have that edge, just it's okay. It's okay not to have that edge. Just make sure that you're aware of it. Now, it's not the same time period. Okay, when they were trading, it's different. You can actually have fundamentals, and you can be like, hey, this company's worth more money. Sometimes you get lucky, and it's like I get lucky. um, Sometimes I try and find a deal when the stock's going down. The reason behind that is because I already know most of the funds, they do their homework. They have teams. They have people getting paid literally like $250,000, entire teams, and all they have to do is just keep analyzing and forecasting based on new information that they're getting. They have teams that focus on global macros. They have teams that focus on global equities, bonds, every single sector, right? These guys are the best of the best. When a company needs help, like for example, AMC right now, who do they go for when they need help? When they need to restructure, they go to the banks because they have all the information and they have the teams that are the best at analyzing it, right? So I want you guys to always remember this. Like, if especially if you're swing trading, you don't actually have an edge. You are literally lagging behind, and that is okay if you accept it and you accept the risk. Now, in day trading, we have an edge depending on which tickers we trade. So when I'm trading something like Tesla, I know it's something that a lot of traders will trade. I know there's a lot of option activity. I also know that it's one of the stocks that has a high ATR. So my timing on my entry has to be like perfect. You guys noticed how I took a short. I tried to cover, but instead of covering, I added another thousand. So as soon as that happened, what's the first thing I did? I stopped out. And that was a good stop out because it went up like $5, $6 a share, right? Now, day trading is where you can make serious money without having to expose yourself to 10%, 5%, or even like 25% drawdowns, right? And to be honest, I prefer it in this market environment at least. So just think about it. If you don't want to risk that much money on a swing trade, then you have two options. Either you're going to invest, and if you invest, it's going to be slower profits, and that's okay too. Like there's no rush. The goal is to be financially successful. Does it really matter if you do it today? I mean, like, like in 4 years from now or 10 years from now, does it really matter? Because even if you have that money, like, what are you going to do with it? Spend it all? No, you didn't work your ass off to spend that money. You're going to continue to grow it anyways. Um, and more importantly, like after you get to like year 5, you're going to realize that, hey, I have the skill set now that I can make more money. So if you have that skill set, most people choose to just let go of their day job and trade, right? Because they can utilize their skill sets, and they probably make more money trading, right? Now that's how normal people should start trading. If you're trading and you have like, I don't know, let's say like $10,000, you're at a serious disadvantage. You can't really add on to plays. You're limited on the plays you can take, and this is why this lesson was really titled "Stop Being a Sucker," because there's so many ways to lose money in penny stocks, in small cap stocks, even large cap stocks. Stocks like LK, guys, the entire world is under like lockdown. How would this company make money when half of China is locked down? Well, they say they're not, but we clearly see that they are. Right? It doesn't make sense. Also, like look at the stocks chart. Let me actually post it quickly. I'm gonna just post a portion of it, okay? Because I want you guys to really look at it. So This company, oh, I forgot the IPO side. Give me one sec. All right, so you as guys can see, it opened at like what 25s, came all the way down to $15. It literally channeled around, and then automatically it moved up. It moved up because of its growth rate. Right? They're saying they had achieved like astronomical growth rates, right? We don't buy it based on that. We buy it usually on current valuation, A, and B. We want to see a consistent growth rate. There's a reason why, like Tesla was good since last November when we mentioned it too. After like at 311s, I was like, just buy and hold, because we saw like a pattern. We saw he, he wrote off a lot of stuff. He took like a $3 billion loss in a quarter, wrote it all off. The book looks a lot more cleaner. The growth rate is consistent, the profit margins are consistent, the demand is there, and now he has mega factories. So he's going to be producing twice as much, right? When you have stats like that, yeah, you can go long on a play. Now, this company didn't have much, but take a look at the price action. Do not buy a stock like this. Wait for a pullback. And I know a lot of people would be like, okay, a technical trader would be like, hey, last time we hit February lows of 2750, we bounced on the same day. So they'll take that entry. That's a technical trade. That's okay. You stop out under the low on February where you had that large volume candlestick, and you stop out if it goes underneath that. And that's a fully acceptable trade as long as your entry is near that the end of that bar, not the bar. What's it called again? The wick. There we go. Right. So that's a technical trade. But if you're buying it and you're like, okay, I'm gonna hold it because I think the company is good. Well, it was good. It was good at, a half the price. You're paying like way more for it. And any like bad quarter, just going to tank on you. Right? So personally, don't invest in these companies. Okay, like there's companies that are worth it. We traded Roku. It was worth it. Um we are not getting that kind of stuff. Like Gabe, are you still on?
Yeah, I'm still here, but
So Gabe will remember this. There was a time when IPOs made sense. We can trade it, we can make a lot of money on it, and usually we day trade them. But I think Gabe, you might remember Roku, where we're like, "Hey, I'm bullish on it.
oh,
We bought
Roku, that
pre-IPO."
was one of your favorite. Yeah.
Yeah, we were bullish on it. We bought it. That was based on literally valuation and fundamentals. So I had no fear going heavy on that trade. Now that was literally based on fundamentals. This year, right? What do we have? We had Snap, and I said it was a little bit overvalued, and then it came down. We still traded Snap too, but not like buy and hold. We had Uber, which was just ridiculous valuations, and that was an easy short. What else did we have? That's pretty much it, right?
Beyond Meat.
It was boring. Oh, Beyond Meat. Okay, that one was easy because it was only a 13 million flow. All you had to do was just hold on to your position or a portion of it, and you're good. We kept. I think I still have it actually. I don't know if I still have that position, but I believe it was 56 or $66. Like, I kept 500 shares after scalping it for days and just held on to it. That is also fine. That is a strategy, right? But if you guys are gonna be just trading it based on like hopes and dreams and on CEO's words, please don't take trades, right? The CEO's job is simple. He has to make his shit smell better than anyone else's. So obviously he's gonna be on the high side of the valuation, right? Your job is to always look for value when it's given, right? That's your job. Trusting a CEO's words, there are so many failure stories when you do that. Don't do that. Secondly, we already did a lesson on it. The odds of you making money by following buy and sell alerts from analysts is like less than 50%. So you can't even use that strategy. And even if you did, the max you'll make is like 1 or 2% within the first few like weeks or months, right? So the reason I'm mentioning all this is because this is not the time to be, swing trading. We're in a bear market. Things go down faster than they go up, right? So if that's the case, don't risk it. Don't swing trade. Now, going to, day trading. For day trading, guys, you have to follow your rules. If you don't follow your rules, there is no way you can make money. This is not a game where you can just like gamble. You can't follow calls. Believe me, I have tried. And like, because I have size, I can kind of like try and save myself, but I've got like tanked on several times. You have to follow your own rules. If you can't follow your own rules, you are just gambling. Just remember that. If you did not have a stop loss going into a trade, you're gambling. If you just kept adding on to a play because it just went against you for no other reason, and you didn't even like account for that as you're like on your positions, you're like, okay, mine max loss. So for me, it's like I don't like to take any losses over 3,000. You know, depending on the size. So if I'm using larger size, I know I'm gonna have larger drawdowns. So based on that, 3,000 to 7,000 is the max I want to lose on a trade at all. Like that, like anything over that is unacceptable for me. So I think it was Tesla. I forgot which stock it was, or TVIX. Something tanked on me. It was the first trade of the morning. I was down, I believe, like 7,000. I forgot. And it just literally tanked because TOS froze up. And, that was a horrible day for me. Horrible start. So, what's the first thing most retail traders do? Oh, and you guys can write this down too, just like, paraphrase. The first thing retail traders would do is they'll A, revenge trade the same thing. B, they'll now use more size because they're like, oh, I need to put more money in because I have to make up money, right? That's horrible. That's the worst thing you can do. When you have a losing start, your confidence goes down. Like, use all your stats to your advantage. If your confidence is down, do you think you're gonna really be performing to the best of your ability? No, right? So the most important thing would be easily just stop trading, go for a walk. Personally, I'd say at least 15 minutes. And then come back, look for a trade, and reduce size. You just took a loss. And honestly, like, you have to judge that too. Like, are you comfortable when you're trading? If you're like shaking, if you're like sweating, you're probably not comfortable in that position. Your body is literally telling you something. Fear is a strong motivator, but it's also something that's so crucial in trading. Why? Because that fear, you need it. You need it so it keeps you from doing stupid shit. Now, something like LK, guys, you have to understand psychology. There is an entire section for that, but you can learn psychology anywhere. Just Google it, and please do. Psychology is one of the biggest factors. If you're a technical trader, you can't be a technical trader and not understand psychology. Human psychology is important, right? You can't call yourself a technical trader without having that. And if you're already at a disadvantage of not knowing fundamentals, not understanding like how the finance industry works, don't even know the players, the big players, what they're doing, what kind of strategies they're using, what price they might have bought it at. You don't know how to read SEC filings, and now you're gonna stack another odd of not knowing how to read your own psychology and other trader psychology. Like, at that point, I would say stop trading because it wouldn't make sense to you. You have way too much stuff to lose. You can literally just go work at McDonald's. Maybe you'll become a manager and probably have way more money in the end of 5 years than you would if you started trading and just, blow it in a year. And if you don't follow these instructions, it's probably what's gonna end up happening too, to be honest, right? So that's why I say stop doing like trades and going all in. Guys, like you can paper trade. You don't have to take a loss. And I understand, like most people trade, it's like, hey TJ, I'm trading because I need money. Yeah, I know. This is not the field for that. If you want to make money, I don't know, open a nail salon, do some side business. There's so many things you can do. This is the hardest way you can make money, and you can lose money, right? Like, let's say you opened a Shopify business and you're selling leggings, right? One of my buddies does it. He's successful. He, I don't know, I think he had like 100K days. Now, obviously, he has an advantage. He's been doing it for years. He's been doing like 4 or 5 years. His store is popular. For him, he can have a skyline. You know, he deserves it. He worked his ass off for it. Then I know another guy that just started, and he just got lucky. He was selling like widget spinners, or spin. I don't know what you call it. Fidget spinners. There we go. um, and he got lucky. He was only 17 and he made money. Right? There's a lot of ways you can make money. And here's the thing: when you buy a product, at least you have that product. Here, if you actually lose money, you have to recover that again. He has boxes of you know fidget spinners all over his house now that he can't get rid of because all the demand died. But at least he can sell it slowly. And I haven't checked back on him, but I'll message him and find out if he's got rid of them all. But at least then he has a product he can at least sell. Here you're just losing money and you're never gonna see it again. Now the next thing, following trades, guys. Like just think about it logically. If you're following someone into a trade, right, especially a low flow trade, are you getting the best price? Unless of course the trade goes against them, like what usually happens to my trades. I like how Cypher words it too. He's like, if TJ adds 3 times, that's when you know you have to buy.
Seconded.
Yes, sir. That's when you go in a little deep. When, when TJ is
Can
like,
someone else play TJ?
no, do we need somebody to test the waters for us first?
Like I would follow Soya into a play, but the only problem is he plays like low floats most of the time. His Tesla plays though I got into. Anything with volume, guys, it's okay to like get into plays. I don't trade a lot of penny stocks because there's a lot of people that are new and they see the profits we make and they're like, oh my god, I should have just traded it. Guys, we bought LK at like $4. When it's at $6, you're paying a premium. When it's at $8, you're paying a serious premium. And the risk of it coming down is greater. Like always remember, the market is not foolish. There is a lot of participants, like the brightest people in the world, are trading in these markets. There's doctors that quit their job to trade just because they can utilize their skill sets and make way more money by just trading. I know engineers, and we have so many different engineers too in UT that realize, hey, I have a skill set. I understand this industry. I can make money. I have something of value, an edge. So I really want you guys to like dig down and say, hey, if you haven't ran a successful business for over 3 years, that's telling you, okay, maybe the first thing you need to work on is self control, is having like goals and actually following through with them and being brutally honest with yourself, being your own life coach. If you have a background in finance, maybe your skill sets is going to be like swing trading, and that's okay too, and long-term investing, and maybe looking for data, analyzing data. That's Now if you're going to be straight out of high school and you're just going to trade, you have to remember, it's okay to trade technically, but if you don't really know what technicals are, don't trade. Please don't trade. Oh, and if you're trading weekly options, like you might as well just I don't know, donate the money. It'll at least make you feel better. Like weekly option, if you're buying weekly option contracts, everything is against you. Every single thing. That's why even when I was looking at Tesla, I was like, should I buy the contracts? And I'm like, it's going to expire worthless. If I buy it, even if Tesla makes a move, I'll probably lose money. And I was like, all right, screw it. I'll just sell it instead. And that made more sense to me. I don't know if it's going to work out. I'll let you guys know tomorrow. But yeah, it's options. I'm going to save that topic for another day. When it comes to low floats, guys, please be careful. It's going to move fast in one direction and then fast in the other direction. And if we go by the same logic that, stocks move up slower than they move down, right? It moves faster when it goes down. Like that's literally telling you, okay, maybe you should keep moving your stop up. That's one of the most important things. If you're trading that, like look how me and Soya were trading that, and other members here. We bought in, we gave it an opportunity. We had our stops in place. We took out profits while it's moving up, right? And we took out profits, but we still kept a core. What I used to make, the mistake, like my biggest mistake, was I'd go in and then I take the whole thing out. So guess what happens? That stock runs another 5%, and then it has a little pullback. And then on that pullback, since I'm a moron for selling it in the first place, what do? I get back in. And guess what? That pullback is a tank. Now I'm stuck in a fucking halt for like the rest of my day. And then by tomorrow, I'm like, okay, it might recover. Maybe I'll have a day two. Guess what happens in day two? It goes lower than the damn price that it was trading today. All right. And that's literally what will happen if you don't plan out your trades. So, and I've been there. I'm talking from experience that that's exactly what will happen. And I'm pretty sure if you talk to 90% of traders that have ever traded penny stocks, they will tell you the exact same thing, right? And you have to remember, in penny stocks, do you have an edge? No. The guys that are pumping in pump groups, they have a huge edge. They have maybe, we have what, 9,000 members here or 10,000? They have just the same amount, but instead, they're more focused on penny stock plays, right? Now, there's something called survivorship biasness. I want you guys to someone write it down, by the way, and just Google it after we're done this lesson, because it's something you have to really like be aware of. When we're silent about a trade, that's because we just got in. When I'm like, hey guys, I'm taking this entry. I think I like it over here. Then I just take a trade. Nobody really cares about that. Really, most of the people don't. But then when it's up $10 a share, I'm like, guys, I'm taking profits. Finally, this is amazing. I'm gonna hold the rest, keep my stop loss at break even. Guess what? People get excited then, right? Well, I'm excited. I just made money, right? When people are excited, when we're posting about a ticker, it's because we've all made money. Does that necessarily mean you should get in because you're gonna make money? No, we already made our money. That's why we're excited. So if you notice that, just stop. Don't chase it. There's always going to be another trade. And like I said, do we ever have trouble finding a winning trade here at UT? We actually don't. If you got into a penny stock and then they got T12 halted, I don't know. That happens. A lot of penny stock groups, yeah. Now penny stocks are running because coronavirus, a lot more traders, a lot of, not stupid. I wouldn't call them stupid, but like new traders, like newbie traders. They want to make as much as they can. They're enticed by the marketing done by penny stocks. They want to make 50% in 5 minutes, and that's what you see on even YouTube. Like every single one of those groups, the first thing you're gonna see is how I turn $500 into 100,000, right? And everyone's like, I can do that too. But you have to realize, how many traders do you think there are? Like, just look at StockTwits on any of those penny stock boards. If you count all the people in 1 hour, right? You multiply that by, I don't know, let's say 10,000 different penny stocks. And you multiply that by, let's say, like, I don't know, like seven hours, I guess, 8 hours. You'll kind of have like a good estimate of like retail traders, pretty much, right? Not accurate, but you can kind of be like, okay, there's a lot of traders. Why is it that there's only like a handful, like maybe, I don't know, 50 traders that can turn 500 into 100,000? And why is it that those same traders aren't like, hey, all of my members have made that kind of money? They'll never tell you that, right? And that's the truth. And that's why we try and stay away from it too. Like, you have to remember that I'm not a guy that can do that. I can't. I require a strategy, and I require a strategy where I have to use less money, not go balls deep into a play. That's definitely not something I could do. I would like have a heart attack. Now, if it's a fundamental trade, I like shorting penny stocks. If you want to learn how to do that I can definitely like tell you your odds are in your favor. Um, and I actually have stats on that too. So if that's something you want to talk about in another lesson, I can do that too. So again, if you trade those penny stocks, low floats, especially low floats, things that are under like, I don't know, like 50 million shares, you're at a complete disadvantage. You're at the mercy of whoever has the biggest account and decided, hey, I'm going to just cash out because I think it looks weak. Also, if you're trading a penny stock and it's already up like 20%, you have another serious disadvantage. And if you're following into a penny stock that has already ran 3 days in a row and it's already up from $2 to $6, and it looks like it wants to break out to $11 because on your daily chart, the next resistance level is $11 because there was a gap down in price, you're also trading with no edge. So again, all of these are stuff you have to consider before trading anything, especially penny stocks. Now, in a large cap stock, yes. Do you take losses? Yes, 100%. I take losses. Everybody does. But here's the best part about large caps. If you can find the stocks that you like, you understand, and you avoid the stocks that you don't understand. There's a reason why I don't like biotech. I don't quite understand it. I tried it with Pfizer and I literally broke even. Well, it went up and then I was hoping it'll go up more. It didn't. It came back to my entry and I was like, it's my entry. And then it tanked and then it took like 6 months to recover. And then I finally got out at break even. That was just opportunity cost for something that I shouldn't have even touched, right? So for me, it's like, I'm not going to do that. Now, if you want to trade something, I like trading stuff that you can hold on to. So, oh, sorry, which sentence?
He doesn't understand what shorting means.
Oh, okay. So shorting is okay. The easiest way I always mention it is you can make money going up. It's called buying a stock and going long. Shorting is the opposite. It's where you make money when the stock goes down. Now, if you have a strategy, guys, you can make money anywhere. Okay, because here's now I told you guys like where you guys don't have an odd, so you guys know that there's things that are stacked against you. And also, like, I know a lot of traders, like penny stock traders, that have large accounts. I'm talking 500K plus. For them, if they get into a trade and it's starting to go down and it halts down on them, what do you think they're going to do? What's the first thing they're going to do? Did they work their ass off, pumping it on every single like board available multiple times a day to like take a loss on that trade? Did they create their groups to take a loss? Absolutely not. So be realistic. They're gonna sell. They have more experience. They probably already have their sell order ready to go, and you're just there on your phone waiting for your data to work. You're gonna be at a huge disadvantage. So again, those are all the odds that are stacked against you. So then the next question is, okay, what can you do? So technical trading, you want to find extreme moves. You want to find where something went down because of fear and you want to buy that fear. That's what I do. Learned it from Warren Buffett. Buy fear, sell greed. You can use that same concept on almost anything except for investing. Well, except for like Warren Buffett, remember, he went to Columbia. He has his knowledge. He knows what valuation is. If you don't know what valuation is and you're thinking you're buying the fear, you're not. You're probably buying a shitty company that's going to go bankrupt in a year or two. He has skill sets. He reads, like to this day, I think he reads all day long. And can you imagine? This guy's been doing it for 60 years, just reading. the amount of knowledge he's accumulated is far like greater than your 2 years of technical trading, right? And what else? And also, be brutally honest with yourself. Most of the time, trades, if you're swing trading and the stock goes up, there's a couple scenarios where odds are stacked in your favor and you might not even realize it. One, the market's moving up. Okay, you're going to make money. Two, that industry is moving up. Okay, you're going to make money. And three, it's a stock with a lower float and they just came out with news and everyone has like attention to that particular stock, like Tesla, for example. You're going to make money. Is that something like, hey, I'm the best technical trader? No, that was like you have odds in your favor. You had no control over what the company was going to come out with. They did really good. You're just playing that momentum. So if you're going to be playing momentum, just be honest with yourself and be like, I'm playing the momentum because the company did good and the market thinks it's good. The sentiment on the, I don't know, on the investor side, retail side is good. Company's image is good. I'm going to be a momentum trader on this. I'm going to swing this trade because of momentum. Right? Are you guys like following along, by the way? Am I talking too fast or slow?
You're doing good, man.
All right, I'm going to get a glass of water. And please take notes. I don't want to do this lesson ever again. All right, so the odds that you can stack. So at United Traders, what we do is we work as a team. The team approach works because there's no way any one person could do all this work. Um, there's a lot of stuff that you want to look over. The first thing I like to do is like a top-down analysis. I guess I forgot, or bottom-down. I forgot what it's called. But you start off with your market view. You're like, okay, is the market bullish today? Or is it bearish? Why is it bullish? Why is it bearish? Find supporting arguments on both sides. Again, like I mentioned, you have to be your own boss. You can't be like, oh, I'm bullish on the market, so I'm going to find news that supports my idea. You have to like be brutally honest with yourself and be like, okay, I am bullish on the market, but the market's moving down. What am I missing here? You can learn more from the stuff you don't know by just asking the right questions. And you don't have to ask us for those questions. You can literally just Google it. Next thing, you want to have a strategy. Like one of the biggest things is having a strategy. You can't have a strategy if you don't have a stop loss. Let me just share one picture quick. Oh, and also it's so hard to go between day trading to swing trading to invest. Well, investing, I mean, it's usually I review my investments like on a daily basis after the market's closed. But it's really hard while you're intraday trading to be like, oh yeah, I'm going to be investing. So, you'll notice I'm going to play a few tickers like constantly. When volatility is high, I'm going to be playing TVIX because I've had really good odds with trading it. Majority of the time, I am profitable. So I think a few times, I have big losses, but 90% of the time, TVIX has been my winner. Tesla, I've made money since I started trading Tesla, like 7, 8, actually like 9, around, 9 or 10 years ago. So obviously, when I'm trading it now, I'm just trading it because whenever the coronavirus is gone, I'm going to be investing in it. So if I already know I'm going to be investing in it, that's a stock I don't mind taking a loss, or maybe even like letting the stock like ride a bit, right? Like if it goes underneath my stop, I'll be a little bit more flexible. If I'm trading something like, I don't know, what's Givo, I stop out. There's no way I can ever recover my money on a penny stock like that. So I keep my stops relatively tight within my risk parameters. Now, if I'm trading something like a stock that I know is like good, like SIG, let's say we traded that today, I'm not going to have much fear in holding this stock because I kind of know what the valuation should be on it. And I think it's a great buyout candidate. So because of that one reason, I'm probably gonna, give it a bit more. What's another example? Something with momentum, guys. When you see something like LK and it just tanked like 90%, guys, um, do you really think like it's a good thing to like buy and hold it? I don't think so. Because what if the news was like, what if they committed fraud? Is that stock actually worth it? The odds are stacked against you, so please don't do it. And one more thing, let me just show you. I'm trying to find this post. We made it in the new traders program. Just give me a second. Found it. All right, let me quickly post it. And guys, all of this is pretty much in the new traders program with less rambling. All right, so I'm going to go through it one by one. And if someone can just type it down, because then I'm just going to like copy it and make it into a command so I never have to repeat it again. So one thing is you have to know your risk, psychology. Everything is there on the chart. I'm not going to just read it out. But this is everything you need to trade, literally. If you don't have any of this, like I know a lot of you guys aren't journaling your trades, you're at a disadvantage. You don't analyze your performance, you're basing it off your P&L, you're at a disadvantage. You're not formulating new ideas and just asking people's opinions and trading based on that, you're at a disadvantage. Psychology, if you don't understand your psychology, other people's psychology, traders' psychology, you're at a huge disadvantage. If you can't follow your own rules, disadvantage. Capital control, if you don't honor your stop losses, manage your risk, disadvantage. And if you're using a poor broker like Robinhood and it goes down on you while you're trading penny stocks, also a disadvantage. So you see how there's a lot of shit that can go wrong. Now, when we take trades, like me, Cypher, Gabe, like any of the guys that have been here, we've been trading together for such a long time that we kind of know each other's strategy. We know, you know, like what to look for, what they're looking for. And then when we pull up a chart, do you think we just blindly follow them into the trade? No, we look at it and we're like, you know what? I like it here too. I'm going to take the trade. I see what you're seeing, Gabe. And that's usually how we would take the trade. Now, if you're a new trader, do you have that skill set like that we do in like I've known these guys for like at least 3 years, right, Gabe?
Um, yeah, since 17.
All right, perfect. So, you know, like I understand his trading style. I've taught him a lot too, so I can actually see it when he's doing his analysis. When he's looking at levels, I can be like, okay, this is easy. I can follow along. When you're a new trader, like you don't have the skill sets to even say, like if you're, especially if you're not successful, if you're not a successful trader, you don't have the right to be like, I can follow this call because I think the chart looks right, because you don't. Your stats are telling you that you're down on your account. You don't have the skill sets to properly evaluate it. At that point, please study, and the growth will be exponential. Now the next thing is the rules here. So when you're a new trader, I think this is pretty much what you really need to follow. Be brutally honest with yourself. Um, Literally, kind of like use this. Now, I don't follow all of them. I haven't read through all of them. Buy the first pullback from a new high. So, you saw me and Soya still doing this technique on a penny stock because people are technical traders. On something like LK, there's a lot of technical traders and a lot of bag holders. So we know that, if there's a pullback, it's going to be a good one because people are going to still be greedy. There was a lot of volume that came into the trade in the morning, as you can see on the chart. So just based on that, when that pullback happens, as long as we time our entry properly, we can make money. Now, I don't know about Soya, but even I was a little bit scared on that trade. I saw it like, hovering around that price, but I didn't see a lot of buyers stepping up. So for me, I'm like, now I'm like, I don't know, 5-10 minutes into the trade, and I'm like, it's still at the same level. I should get out. Um, and then, that's when I reached out to Soya, and then I just told him what I have. And he's like, yeah, I have shares in it too. And I was like, okay, perfect. You know what? Maybe I should just give it a chance. And that's cooperation. That's teamwork. We can do that because we've been trading together for a long time. Now, the easiest strategy, guys, the most simple strategy is buy at support. Why is it the best strategy? Someone tell me. If you're going long, why is it the best strategy to buy at support?
Because you can put your stop right below support and have a really good risk reward ratio.
Exactly, right? Wow, Cypher, that's amazing. Thank
There you
you.
go, bud.
Right, so when you're buying at support, the moment it breaks, like you just bought it for one reason, because it's at support. You think it's going to go up. The moment it breaks support, what do? You just stop out. That's not a mean reversion trade. That is a support trade. And you do have to learn the difference between the two. Mean reversions can go against you, and you're slowly scaling in because you think there's going to be a reversion back to the mean. Whatever mean you use, you can use the VWAP as a mean. You can use, I don't know, like a 20-day moving average, 50-day moving average, whichever one you use. You're like, okay, I see it testing this level, so I'm going to go in for a mean reversion. Just understand, with mean reversion trades, you can be down before you can be right. Now, for me, I like them because it usually goes against me a little bit more. I try and time the bottom, but sometimes it's like it goes against me more. The good thing about that is, and what makes it attractive for me and appealing, is because I can now take size, because now I just scaled into the trade. And when it does go up, I make way more money on it. So for me, it's appealing because of that fact. For new traders, just buy at support. Buy the first pullback. If you miss the trade, buy that first like strong pullback. And honestly, like that's probably the easiest one. If you missed, don't chase. Don't chase while the stock's moving up. Buy the fear, sell the greed. So if you're gonna buy the greed, you're like completely at a disadvantage. What else? Oh yeah, one more thing. As a trader, you need a trading journal. Second, you need to have this. This is one of the most important things that's really helped me out personally. I printed this out and I actually kept it on my desk. And every trade I took, I'll quickly analyze how good I did. Like, what did I do wrong? And be brutally honest. I'll tell you, most trades, I probably have two things that I could have improved on. I know it's the same with Cypher, Gabe. I see their trading journals and their trades. So you can kind of see how hard they worked for it, and that's why we make money. That's why, like Cypher, I forgot. I think your best day was that 30K day, right? Or maybe it's better now.
I think it was 42.
42. All right, perfect. So in one day, guys, this is something that I think Cypher, when you joined the dream team, I forgot what your stats were, but I don't think you even made 40K in that time period.
No, I don't think I did.
Now, because of the worth ethics and because of his experience, because he ran successful businesses, $1 million businesses, he has that mindset. He already has being his own boss down. Now, if you take a, I'm just gonna quickly share this. I like Cypher's charts, really clean. So you guys hear how many trades we do, right? Can you imagine at the end of the day doing this on top of that? Can you imagine every morning, um, literally writing down where your watch list levels are, which levels you want to tackle, where your R1, R2, S1, S2 are. He had to do that pretty much like every single day. That was like the requirement of being in the dream team. And now he has like 43K days, and it's literally just by doing this. It's just consistency. And does he deserve it? Hell yeah. And because he put in that work. If you guys aren't putting in the same kind of work, you really feel like you deserve all that money? Because why? You spent hours in front of a chart? No, that's not how it's done. You actually have to be able to look at it and be brutally honest with yourself and be like, hey, if the guys that are making money are doing this, what am I missing here? The other thing is, work collectively. I've learned so much from other traders here. And I can tell you, when I started, even with my account size, okay, even with a large account, I was probably making about $1,000 day trading a week. If I was even day trading, to be honest, I was still like a little bit scared. So, when I first started, it was just like swing trading. And then I'll just like dabble on day trades once in a while when someone else called it. Obviously, it's a hit or miss. Wasn't lucky at all. And yeah, what really helped me was this group. It's just like being part of something where everyone is dedicated and working towards a common goal. That is how you get better. And I like these lessons because it keeps all of this stuff in the front of my mind. And that's really important because when I'm in a trade, you fall to your, okay, wait, I'm not gonna butcher that quote. Let me just quote it. There you go. So that's a quote. Navy SEAL was asked, why do we train in such extreme conditions? He replied, under pressure, you do, I say do not, rise to the occasion. You sink to the level of your training, right? So for me, teaching, it just keeps all that knowledge like right there in front of everything. So that's why I enjoy it, because I actually learn a lot more and I retain a lot more knowledge by just teaching what I know. So I highly encourage that too. If you guys have something, share it. That's the only way this, like you can work. You have to, well, this is the only way that you can actually make money, because funds are trading like a team. There's other groups that are trading like a team. So if you want to be successful, this is pretty much how it's done. There's a reason why SMB Capital is successful, because they work together. There's a reason why all the other prop firms were successful. Some of them lost. One of the most important factors is this. It's just like study, work hard, and be brutally honest. And the other thing too, guys, if you're new, please like just paper trade. I know everyone wants money. I know coronavirus is probably like like dampening your funds and stuff. Do not put yourself into a worse situation by losing that money. So yeah, I think this is the last time I ever want to bring this up. If you have any questions, feel free to ask me now. You don't have to. You just have to put your trades. Get Trader View. Um, guys, I don't recommend you getting trade ideas. We stream it for free. I don't recommend you guys getting any news scanners, because we have such an amazing team that post any news that's relevant. The one thing I always recommend is Trader View, right? I don't recommend brokers or anything. This is the one thing that I really do recommend, because it's the easiest way to like monitor your progress. It is literally the easiest thing. All you have to do is import it into there. Like anyone can do it. There's even a guide on it on that website. Don't ask me how to do it. You can actually do it yourself. And Google is your friend. If you don't know the answer to something, it's okay. I don't know the answer to everything, but I really do know how to use Google. And because of that, I can get by. So, good question. Buy the first pullback on support. When do you think this pullback is likely to hold? So again, that falls to into like your training. You have to know technical analysis. You need to know tape reading. You need to know when buyers are stepping up. Is it looking weak, or is it looking strong? Are you buying in? Are you the first one in? Or are you buying it because, hey, other traders, other technical traders are looking at it and they're like, hey, this is a bottom too. Now, I'll tell you one tip. When you're doing buy the first pullback, don't just get in as soon as it tanks. Please don't do that. The moment it tanks, here's what I see a lot of traders do. The moment it tanks and it comes out of a halt and it tanks, it hovers around that price for like 2 minutes and then you guys are in. And guess what happens? You get tanked on again. When you thought it was a pullback, it really isn't. It was just like a consolidation on price before another pullback happened. So wait to see a formation. Another tip I have is use your Bollinger Bands. When those bands are wide, just know you are risking a lot of money. When those bands are really like slim, it literally means that price has been consolidating and it's ready to rip. You'll notice this on every trade, unless it's like news related. There's a catalyst that like spiked it up. Most of the time, moves happen one way or the other once price has consolidated. It's called price discovery. Whenever a stock goes up or down, there's going to be a period of time where some buyers are going to think it's worth more if you're on the long side. Some sellers are like, no, this is way too overvalued. So it's going to be channeling around a price level. And when it does that, all you have to do is wait till those Bollinger Bands really like tighten up. That's when you get better entries. Now, I'll be honest with you, on LK, that was my biggest fear. And it was just based on Bollinger Bands, to be honest. Let me quickly show you a chart. All right, so when I bought that entry, it was around, I don't know, let's take a look. So I tried to buy, I think around like that 660 area. And then I had to add on to it because it tanked on me again. And then because it tanked on me, I added on to the position. And then it finally moved up in our favor. My first scale out target was 680s. And that's where I took some off. And then I just waited and then slowly started scaling out in like on the way up. Now, if you take a look at the chart itself, actually, can someone post it? Makes it easier. You'll notice that the bands got really tight. But when I got in, it wasn't tight. So for me, I'm looking at it like, hey, if it hits that 2 standard deviation mark, I'm going to lose a lot of money. So I wasn't really comfortable in it. And then I saw the bands were tightening up. The moment I saw that, felt a bit more confident. And after I consulted, you know, so yeah, I was like, all right, I'll just stay in it too. If he's trading with large size, then I should be too. So my fear was simple. Like I thought that it could probably go down to, I'd say about like 550 ish. So that was my risk. And then after a tank like that, I had time to like analyze the volume. And when I analyzed the volume, I was kind of like, there's a lot of bag holders, people that bought it over like $8. There was a ton of volume that got traded from $8 to like 10. So that could potentially act as a huge resistance for me. Everyone that is bag holding, they have two options: cut the loss or add on to the position. So I was thinking, okay, if I bought at $8 and I added over here at 660s, by seven, I should get my average down to like, I don't know, 740, 750 ish, right? So if I got it around that average, then I know that's going to act as a resistance. So that's why at 680s, I was like, okay, I'm going to scale some out there. And then at 690s, and I forgot the entire trade, but yeah, pretty much. I kind of use that to like guesstimate where someone would sell if they were to pretty much add there. And that worked out this time. Doesn't always work out. Now you have to remember, I made money on that first trade. That first trade did really well for me. Because of that, my risk was just literally my capital. So I felt confident on just adding on to it because I felt like the support was holding. Buyers were there on the tape. The only problem was like it wasn't running up. People were selling into it, didn't even know why. But I was like, I'll risk the profits today. And one more thing about me, guys, like I don't mind risking the profits I made that same day. I don't want to lose when I haven't made any profits. Those are my worst days. When you're in that mentality where you have to recover money, it is so hard. Your confidence level is less. And if your confidence level is low, you're not going to be making the best decisions anyways. You're not operating at 100% efficiency.
Can I put in a couple cents here, TJ?
Yes, please.
One of the things that I know that has really benefited me, and I think a lot of other people, so people that have spent a lot of time in front of the screen, so added a ton of screen time, that has what been one of the best teachers. Just knowing what to look at, what is reacting, knowing what pattern set up, and just continually just watching them play out in live time. And if you want to paper trade that, it's probably a little bit more beneficial. So you can see, okay, I think it's going to move here. Hey, it failed. Why did it fail? Okay, I'm going to try it over a series of 100 trades. Did it have higher success than lower success? Hey, it was right 70% of the time. So the other time I was looking at it on a single trade, it wasn't a total failure. It was just the 30% that just didn't work out. So have larger data, have many hours in front of the screen, and you'll really get a feel for it. Yeah, it's really helpful.
Yeah, yeah, and when you're looking at your screen, please don't just look at the chart. One of the biggest things that I used to do was tape reading. That is something now that I pretty much have it down to like a science, but it's something that you can't actually learn from just books. Right now, tape reading is really difficult to monitor. We have a guide here. I'm just gonna post it right now. This is what you're gonna look for. Now, in this picture, things seem easy. Ask is stepping down. Most transactions are on the bid. The bid is thin. The ask is, sorry, like, yeah, the bid is thin. The ask is thin. These are stuff that you want to look for. You're looking through your level two. For us, we kind of use like the full book, so you get like the full view of it. So we want to see, okay, where's the next ask? And if we see like a little bit of a, like a distance between it, we can be like, okay, it's probably going to go up that way. If we see that there's more buyers on the bid and the bids are stacking up, we're going to use that to our advantage too. But like in this picture, it seems like, oh wow, it's so simple. This is all I have to look for. In reality, it never works out this clean. You're always going to have a mix of two. You're going to have buyers and sellers in the marketplace. Every order is a buy and a sell. So both things are going to be happening at the same time. You're looking for which side has the better odds. You're going to use your technical analysis skills. Be like, hey, the stock went to $10, pull back down to $6. I think this is where it starts to move up. And how do I confirm that? I look at the tape. I'm like, hey, are people buying on the ask? Are people willing to pay the price on the ask because they want to get in quick versus paying on the bid? Now, this kind of trade, there's going to be a lot of technical traders. So because of that, you can use that to your advantage too. Because you're going to be like, okay, yeah, technical traders are, majority of them are going to be, retail traders. So for that reason, you know how much size. They're not going to be like tanking a stock with this much volume on you, so you can take size on it. Well, I did, at least. really have to be active. And one more thing too, like the reason we started trading a lot more, like yeah, once in a while we'll get trades like this where it's like $4, but it doesn't necessarily mean tomorrow we're gonna find another trade $4. What's probably gonna happen tomorrow if you're gonna try and look for a play like LK? Here's what's gonna happen. You're gonna end up just losing money. That's pretty much it. Whatever money you made today, you're just gonna throw it out the window, because that's what most people have. They're like, oh my God, this works. If I buy every single stock pre-market that went down 70%, I'm going to make money. That's literally not how it's going to work. You don't have enough data to support that theory either. I believe if you think you have a strategy, you have to do at least 100 trades. Within that 100 trades, you are still going to have some outliers, but majority of the time you're going to have a complete idea of, hey, does this strategy actually work? Now, the reason we train you guys over here to be better, to work harder, and why we trade a lot of large caps is for one simple reason. Trading large caps is scalable. You can grow your account with less risk. You know, day trading is risky anyway, so adding more risk by trading low floats is just scary, especially if you're a new trader and you need this money as income. Definitely don't do it. But let's say, like, you know, you're good now. 1 year or 2 years down the road, you're now successfully making trades. You've like fixed everything you needed to. You have, I don't know, let's say like your psychology like 70%, right, of everything figured out on all of those different topics that we mentioned above. Let's say in your skill level, you gave yourself like a B+. If you're at that level, then the next question is, okay, how do I size up? If you try sizing up with penny stocks, most of the time you're just gonna go back to like break even, or worse, maybe you can blow your account. So the thing with large caps is, there's way more data on it. There's way more opinions you can listen to, and more importantly, you know, you can scale that position up. You can use larger sizes. One of the biggest trades that I like, sorry, not biggest, like the best trades that I kind of recommend to any new trader is going to be AMD. AMD, it's really simple. 30-cent stop loss, 60-cent at least profit target. When you hit that 60, take half off, move your stop loss to break even, and just forget about the trade. That's usually like what I would highly recommend anyone trading. It has enough volume. You don't have to be like worried about it. And one more thing, track things move with the market. It moves up and down based on the market. Make sure that you're trading in the market. Oh, taking off like 1 hour or 2 hours. Let's say getting into AMD. Don't get into the square. Like 1 hour, I like to take some off. Right? I don't mind if it's a one-to-one trade, because I have more success hitting one-to-one trades and being profitable than if I was to always go for that 2-to-1 and it just doesn't hit that 2-to-1 mark and it comes right back down, and now I'm just like sitting at break even and just cutting the trade. So I like to take it just at my like 1 hour mark, right? So depending on the trade, it's different. So let's say it's AMD, it's 30 cents. So for this example, when it goes up 30 cents, take half off, move your stop. You can move it up if you want so that you don't lose money, but sometimes when it's within 30 cents, it's going to come right back down and just stop you out. So I like to keep my stop where it is before I enter the trade, just so I don't get like stopped out on some stupid candle. And yeah, and then the rest of it, just wait to see if you get that good trade. You know, the entire time when I trade, my only goal is to catch a good trend. Catch like the bottom on a good trend or the top and short it down and just hold on to it. You only need one really good trade. But if you don't have risk tolerance, you know, you're going to need several just to make back the losses, right? Gabe, you have anything you want to add to that?
Time is key, guys. I know there's a lot of people that really want to jump in and make money right away, but if you jump in right away, I want to say 0.1% of you would make money right away. And don't think you're that guy. Learn strategies, study hard, put lots of hours in. I'm not talking about a couple hundred hours. I'm talking about, I know it sounds intimidating, but over 1,000 hours at least minimum before you can kind of see a huge difference between where you started and where you can go.
I think more than that, I'd say 3 to 6,000.
You really get good at everything, at something specific, they actually say about 10,000 hours. But I think with trading, I don't think it's limited to 10,000 hours. So you can always learn more with trading. That's one of the tools that comes to me. It's a useful system. You can always learn something, and even if you have 10,000 hours in, probably has double, and he's still learning.
I'm still learning. I still haven't perfected anything yet. You know, it is so important to constantly improve because the market's constantly changing. You have to constantly evolve to it as well. And I think each topic you have to spend 10,000 hours. The first thing is going to be risk management, how to manage risk on a trade. I like the one that someone posted here. I already made a post about it too. When you're trading, start with 100 shares, do 100 trades, see your results, and then go from there. But you can't even get to 100 trades if you don't use a stop loss. You just blow up. So the first thing is risk tolerance, knowing how to stop out and actually stopping out. This isn't a game where, like, if you're like, like you have to be right all the time. You don't have to be right. You actually don't. You just have to know when you have a good hand, and you just have to stick to like hold a position. That has really changed everything for me, to be honest, because sometimes I get it too. It's like I'll take a trade and then I sell the entire position and then it goes up and pulls back and then I buy it again. I don't have to do. What if I just kept that position? If I just had a little portion in it, the like I'm not as enticed to take another entry. So that way I'm not getting into like stupid situations where I could potentially lose money. And realistically, we mentioned this yesterday. The key to trading is to learn how to not lose money. You will be profitable the moment you stop losing money.
Yeah, I think that's a key point for a lot of people to learn. A lot of people say that it's really important. I really want to make the money, really want to make the money. And so they push themselves to get higher risk variations. But the money will come if you put more focus on protecting what you already have. If you protect the downside, protecting the downside is more important than getting the upside. Obviously, they're both very important in the common play. But if you protect the downside, then the upside will come. If you don't protect that downside, you'll be knocked out of the game before the upside even comes. Risk management is more important than profitability because profitability will eventually come if you have good risk management.
Exactly. And guys, like believe me, like don't push your money to work hard. You have to work hard for your. I see a lot of people doing the opposite thing. And yeah, that's why I wanted to do this lesson, guys, so then I don't have to ever do it again. If you guys, I think, yeah, JC is recording this too, so that's perfect. I can always just refer to this. If those individuals don't want to listen to that lesson, then it's up to them. Um, this is a good point as well. So you asked me, is there a place where the lessons are organized? Technically, yes, because we're trading too. You have to remember there's no way for me to like go on OBS, start recording, and then do a lesson and then go back to trading. No, like I'm actually trading while I'm doing the lesson 99% of the time. So because of that, luckily for us, we have like Ocean Grove and other members that literally just post when I do a lesson, what time, so then you guys can review it on our YouTube stream. It shows you where the time, um, and that's in Eastern Standard Time, I believe. So market hours, and you can kind of just correlate that and listen to the lesson again. And let's see what else. There's one more thing I wanted to mention, but forgot. So I'll just answer some questions. So you bring up a good point. How do you quickly make your adjustments to moving up or down your stop loss? So for me, I like hot buttons. I like having active trader up. Some people call it DOM, matrix. There's so many different names to it, but they pretty much serve the same purpose. I'll just quickly cancel my stop and then replace it. There's different ways you can do this. You can set up bracket orders. For me, I liked bracket orders when I started trading because it took the tendency of me like taking off the stop away. So when it hits, I'm out of the trade. It's okay. I can live with it. And one more thing. Never chase guys, but that's one more thing I want to mention. Like, okay, there's a lot of things I want to mention, but um, make sure that you guys are stopping out. It is far easier to live with the fact that you stopped out of a trade than it is if you didn't stop out of the trade and it goes against you. The losses, like, okay, when I started trading too, right? Let's say you're down $400 and you're like, okay, that's my max risk level. And then it goes down like $50, comes right back up to like minus $350. The first thing people are going to be like, okay, I'm going to take a little bit more risk because I can see buyers are there. The moment I told that to myself, guess what happens? Now I'm facing like $1,000 loss. I could have made two mistakes, right? If you have a win rate of like 70%, always remember this actually. One second. I posted it in the new traders program. I'm going to just repost it here. Every time you take a loss over your predetermined risk, that could have been another trade that would have made you money. Always remember that. So every time you take a loss, just like take it. Like if it hits your stop loss area, take it. If you're a new trader, I think you should have hard orders in. Like make sure that that is in the market. For me personally, like I'll have my order. I don't submit it. I use large sizes. When people see that, usually it goes in the opposite direction of where I want it to. So for me, I just like put in the orders, and I sell into the strength. Those are my strategies, but that's because of size. If you're not using size, realistically, just put a stop loss in. You're the market maker. The is not going to be taking out your 100 shares. Believe me, they're not trying to target you. Any other questions, guys? So, Bobby, that's a good question too. What if you put a stop loss around where lots of other traders might be? So that goes into your strategy. For me, I like to buy stop losses. I like to buy where most people's stop losses got triggered. That's a lot of liquidity in the market right away. So I can take a full size on that position. When it starts to tank, what I look for is the ask. I already know that stops are getting triggered. So there's no point in me looking at the bids. I look at the ask and I look how fast it's coming down. Most of the time, what I notice is there's like a delay. When stops get triggered, the ask is still high. But then there's that sweet little like 1 second mark where after it tanks, the ask just drops pretty much as close as it can. Like the spread between the bid and ask just shrinks. When that happens, that's when I like to go in. Um, and then I'm obviously expecting it to go right back up. Sometimes it happens, sometimes it doesn't. But because I bought the stop outs, I don't have to worry about someone else's stopping me out. As soon as it goes against me, you just stop out, right? Because you're buying at the break of support. How do you determine the risk of a given trade? Good question. What's your portfolio size? 1K. Okay. So how much do you want to risk per trade? Well, this is how you determine it. This is the easiest way. How much are you willing to lose from that 1K? I'll let you guys do this. This is fun. So, okay. Well, see, that's not a defined answer. I know exactly how much I want to lose. Like, I know what I'm willing to risk. How much are you willing to trade? Because the probability of winning, if you're a new trader and you're not a successful trader, how would you know what your probability of winning is in the first place? That's something that's out of your control. What is in your control is your stop loss. How much risk can you expose on the trade? Well, yeah, you will have a way to determine it. Don't get that wrong. If you're a new trader, you don't have the right to be like, this stock's going to go in one direction, because your P&L is telling you something totally different, right? But when you're a trader and you have trades and you have a proven strategy, you have stats. You know which strategies have a higher probability of winning. You guys know my mean reversion trades are my highest winners. Like, the dollar amount wins on my mean reversions are always higher. But my favorite trades are buying stops. But if I buy stops, what am I doing? I'm day trading. I'm not going to have that much size in it. I'm going to be scaling out the moment it goes right back up and hits that support level. So I'm not going to have enough size if it continues to rip up. So my probability of winning on buying stops, like right underneath support where everyone else gets stopped out, I have a higher chance of a higher probability of winning in that strategy. But because I don't have enough size, it's not the one that makes all the bank, right? Cypher, I already taught you these. I play them every day. Yeah,
Well,
like,
the mean reversion maybe, but this is the first time I've heard about the buying the stop, or maybe the second time I've heard about it, but I don't know how you actually execute it.
I just buy stops with size. It just makes easier. It's just
Well,
there's
if you
not a
shared
lot to it.
if
Oh,
you
sorry.
shared one chart where you would do it, that would really help.
I don't
With
think
your
I
social
did that
security
today.
password, I'll link to it.
Yeah, you know what? I'll give you an example. Wait, I don't know if I traded anything today with that strategy. I was mostly doing mean reversions, but let's say Tesla. I'm just gonna go on the Tesla trade and see. Mm. Oh, here's a good example.
When you normally take a mean reversion trade, do you a lot of time have a fundamental basis for that, or is it mostly
Most of the
technical?
time.
Okay.
Or it has to be like an extreme down move, but there has to be volume. And if it's an extreme move, but there's volume on it, then, I'll do a technical trade on it. If I think like it just tanked for no, like, because the market tanked, but the stock is still good, then yeah, I can do that too. But here's a good example of it too. And this is, you have to use your skill sets on this. This is like a tricky one. I wouldn't recommend it. You have to know like technical analysis. Like Cypher, it's the same thing. Like when we were buying at support, remember we talked about like reactive entries. What's the other one that I taught you?
Proactive.
Proactive, right? So on proactive entries, you're expecting something to happen, right? I mean, that's the entire concept of trading. You're thinking that, hey, this is probably going to go up. I'm going to take an entry and make money. So on the chart that I just posted there, you see how Tesla, um, we created a base, we moved up, we hit like that 3 standard deviation around 10:30 a.m. We came back down to that support range. People got stopped out. Right where that line ends, you see how there's a lot of volume. So people got stopped out because that's where their stops would have been. So right after that, you notice the stock came down and we finally created like a newer bottom. And it looks like pretty much a cross, right? I don't know what the candlestick pattern, like the actual thing is called anymore. But you see that cross forming. You see some volume. You see RSI's down to like a support range, and you see RSI starting to move up. So my entry would be right where that arrow is. Buy, because everyone else is stuck there. Look at the volume profile too. The volume profile is telling you this is where like the volume was traded. So you want to see a mean reversion. It was a strong uptrend. You got that little bounce, and you're going to buy just underneath where everyone else gets stopped out. And if you notice on the chart too, that's also where volume kind of increased for that
Okay.
1
Are you
minute.
talking about that morning star right there? I
Yeah,
guess
so
you
that
are.
morning star is like that's not where I want to buy. I'd buy where the arrow is, right when it breaks under that morning star, because those are powerful candlesticks. Usually when you see that, especially when it's at a like a bottom of a trend and you see price moving up, you can see that there's buyers. There's clearly buyers. And then when it comes back down, RSI is higher at this point. Like again, you have to use all your like skill sets on this one, but you can see RSI is coming down, but the RSI came down to a level that's higher than the previous one. So I can see that there's some sort of a strength here on that push up, and then you just kind of just like buy it over there, and then stop out. My stop out would be the 3 standard deviation line, and yeah,
Okay, perfect. I think you have kind of gone over that before,
I
but
have.
I'm glad you did that. And I got a little bit out of that, and I'm pretty sure other people did too. I think the thing that you have that a lot that I don't have is on a trade like that. A lot of times you would have a fundamental driver as well, and so it would add to your conviction. Therefore, you would be willing to size a lot deeper, right? And
Yeah.
that's pretty important.
And one more thing is like I like trading stocks that I know the fundamentals on. Guys, use that to your advantage. You guys have a list of long terms that I like. Guys, like just monitor those trades. If I think it has fundamental value, it's because I spent hours, like days to be honest, on researching it and finding out the fundamentals. Now, obviously I'm not saying invest in it right now, but why can't you just make money on a daily basis and make money, and then when you do finally invest and you finally hold a position, you don't even have to be worried about stopping out because you know the trade, you've made money on the trade, you have higher conviction on it. When a pullback happens, because let's say you're up 20% now, right, on a position, and they had one bad quarter, the first thing you're going to do, if you don't have enough conviction, if you haven't made enough trades and you haven't taken profits, you're going to sell out of it. You don't want to lose any of the other profits. But by doing this and you're trading the same stocks, what's going to happen is you're going to hold on to that position. Okay, fine. It had a bad quarter. I listened to the earnings call. CEO is confident it's going to be better. Guidance is in line. So, you know what? They just wrote off one quarter. Not a big deal. I'll hold on to it. And that's how I did it on Shopify. If you take a look at even like that shop. Oh, you know what? I have the picture saved. Like imagine the pullbacks. Like I was up on this trade. If I didn't take out, like, yeah, when a new trader looks at that trade, they're like, you bought 2,000 shares. You sold 1,000 shares for like $7 and the stock ripped all the way up to 340. That's a horrible trade. No, that because I made that profit, I locked in that profit. I don't care if it pulls back. And as you can see, there's many pullbacks on that trend. And I still stayed long on it because of that one fact. Because I already locked in that profit, I was confident any pullback that happened, I didn't even want to, well, I couldn't even add on to it. It never pulled back really. It just kept like flagging. But yeah, on those pullbacks, like those extreme pullbacks, which it did have, I didn't have to worry because I trusted, that ticker. I had conviction in it. Sorry, which indicator?
It's support resistance pivot indicator, I think.
Oh, pivot lines. Here, I'll send you guys like the layout. And if you guys, I don't mind you guys like using it, but don't give it to some other group. Don't be like posting my shit somewhere else. It's for our members only. And yeah, just keep the name United Traders. So whenever you do post a chart, it's like free advertisement. Because I'm horrible at marketing. I think Jay-Z has it. Give me 1 second. I don't know. It's actually posted somewhere in the trading floor. We'll go over that later. I can't share like my actual Bollinger Bands that I have on TOS. Just because like the person gave it to me, he gave me strict rules. Do not share it. But literally, it's just two Bollinger Bands. One is a 3. Both of them are on a 20 EMA. Okay, 20 EMA. You can write this down. And one is 3 standard deviation. The other one is 2 standard deviation. I look for entries near the 3 because that means it's an extreme pullback. I use stats in my like favor. Like that's my background. I like stats. So you'll see that in my trades. I like to have stuff that are like leading indicators. Volume profile, that's a leading indicator. When I bought Shopify, did I have any fear? Look at the volume profile on that. Everybody bought exactly where I bought. So people that buy Shopify, they're not just retail trader. That's a lot of volume. That's hedge funds. That's portfolio managers that load it up as well. So for me, it's an easier trade just because of volume profile. And then RSI, I love RSI. It's a godly. It's not always correct. Sometimes it goes against me, but for mean reversion trades, I use that to kind of see how far has it gone down or overextended. Oh, and that being said, guys, we're at 10,000 members at UT. That's amazing. All right.
That's huge.
It's so funny, Gabe. I post so much like killer, macro data on my stock tweets, but I never got so many followers until today when I posted about LK. I was like, wow, I post things that can actually make you so much money and you don't even have to work for it. You just have to buy and hold. But nobody's interested in that on stock tweets. Everyone wants the 150% returns in a day.
People want the instant gratification. That's 99% of the people out there.
Oh, yeah. That one more thing, guys. Gabe brings up a good point. Trading is literally about avoiding that. If you can avoid instant gratification, you will be good at this. It's a long game. You can't be one of those guys that are so, what's the word? Like emotional, not just emotional, but like, not emotionally controlled, right? If you're not disciplined, you're going to just lose money.
As far as the Bollinger Cloud thing, we have that in the TOS channel.
Oh, thank you. Oh, yeah. So if you're a contributing member, so if you have a white name, you don't have it yet, but if you are, I believe, a upper echelon rank, then you're able to access the TOS channel. And then we have every script in there, pretty much everything you'll ever need. You can go nuts. But again, like, we're here to give you a helping hand, not a handout. A lot of people, just want to like use your shit, right? And I fully get that. Everyone wants to learn, but we're a community here. People that pitch in, I will spend way more time helping them out. And any of the guys on our dream team, junior associates, executives, even upper echelon knows that I don't mind spending a couple hours reviewing your trades, but you have to show your worth to the group at least, if
To
not
answer
for
some of
me
the questions
directly.
that are up there, it says, how can I get access to TOS? Download it. And does it take 10 years of hard work to be able to make money? It all depends on how many hours you put in a year. If you put in 2 hours a year, then
Yeah.
no. If you put
Yeah, I
in,
don't think it's 10
1,000,
years.
if you put in 1,000 to 2,000 hours per year, then you can shrink that time way down.
Absolutely. I've not even been here for 2 years yet. My anniversary is this month. You just got to go hard, or put in a lot.
or stay
Yeah.
home due to Corona.
Honestly, guys, like I'm gonna give you a good example of this, okay? Like I have to give a shout out to Meta. She has been, you guys see her post on the channels. Like she always posts news in the morning. She reads those news. She doesn't just like post it for no fucking reason, right? So she'll review the news. She has her opinions on the market. She likes the stocks that she did well on previously. And again, that builds conviction. Conviction is good. When you have conviction, you're going to stay in trades longer. You're going to be able to use more size. Um, and for her, it's Costco. For me, it's like if I have a shitty day, I trade AMD. Usually it works out for me. I'll try and at least break even. If I have a like shitty start to the morning, AMD. Um, Tesla, right now, I like Tesla just because if like I got really good at my timing. So for me, 70% of the time I can easily like make money just scalping $2-3 on something like Tesla. TVIX, again, conviction on that trade. And that's why you'll see me trading. It doesn't mean that you guys have to. Now, I'm just gonna show you. So I believe she joined the Dream Team. Oh, actually, I don't even remember when she joined. It was a long time ago. Like I'd say a year and a half. So let me show you her record. Right, and I'll show you like these are real stats, guys. Okay, they're not paper trades. Absolute amazing. Let's see here, guys. Like I think yeah, in like 2 years you can do it. I believe in you guys. You can do it if as long as you put in the effort. Like if you don't put in the effort, you're not gonna get anywhere. I don't think days is how you should mark anything. It should be based on hours. How many hours? Like you get most people at least like if you work at a job, you get paid per hour. So use that as like your measure. Don't use it by I've been working at this for like 5 years. Yeah, but you've only been looking like trading for 2 hours and then going to work in the morning. So if that's the case, you're not been working for 2 hours. There's one guy that probably did everything you've done in like 2 months. So that was last year's stats. Now this is this year's stats, and it's a huge improvement, as you can see there. One of the big things that I really like about our PNL, and I think anyone can do it, guys. Like she works a job, and I'm not going to expose everything, but she works a job and still comes and posts in the morning and trades. Like it's not easy to do it, obviously not, but that's how we all started. We didn't just fucking start with like $1 million accounts. I wish it was that easy. I wish I was a hedge fund kid. Like, but that's not how it works. We actually had to work our way here. The first 7 years of trading, I was working and I tried to build as much as I can at the time, and I tried to put as much as I can into the markets. Now, this is her, I think, all of her trade in that time frame. So you can see there, it's amazing. Like $15 a share, profit factor of $9.65. So that's huge. Sorry, not $9, but 9.65. Winning trades 86%. Consecutive winning trades 31. Consecutive losing trades only 2. There is over 95 trades over here, so it's not a small basket of trades. It's a lot. You can see also on this that her average winning trade is $67, average losing trade is $44. She doesn't use a lot of volume intraday, so you can see that there, average daily volume. A lot of people have good stats, even myself included. It looks really good, but we use a lot of size, right? Like, yeah, I'm making a lot of money, but I'm also using a lot of size. So you know, always like there's going to be a lot of traders that'll show you their P&Ls and stuff, right? But you have to remember, most of us, we use size. Our P&Ls are going to be big. Now, one of the biggest things that I really like on this is average holding time. It says 16 hours, average losing trade 2 days. That's something that we were actually improving on. There was a couple stocks he was holding on to. Now, average daily gain, $78. And, when you look at that chart, right, here's what most people would do. This is not paying enough. I'm going to quit. And they'll just give up. She didn't do that. Every day she's just tackled this. And now I'm going to show you her stats from just January to now. And it's not a small amount of trades. That is 62 trades, 91% win rate with a profit factor of 20. I don't even have 20 profit factor. Take a look at her biggest wins versus the biggest losses. Take a look at now she's making on an average trade $80 a share. Average losing trade, $40. You guys see how these metrics just improved and how that makes like the entire, like, this is everything. If you learn how to not lose money, you'll hold on to trades longer and you'll make better decisions. Look at her average hold time on losing trades, 40 minutes, winning trades 2 hours. That was a complete 360. Complete 360 there, right? That is amazing. I have in my lifetime never seen that before. That was a complete 360, and really impressed when I saw that. And every other metric pretty much stayed the same. Like, obviously the win rate went up because her skills went up, but take a look at the biggest factor. It was just literally just like switching that average hold time to losing trades. Like, she didn't bag hold. She got out of those losing trades, gave it enough time for it to work, and she traded this one thing that she fully believed in, she fully has confidence in, and that's perfectly fine. And I'm just using this as example, but honestly, everyone on our dream team, it's pretty much the same stats. Nick is like the lagging one, the weakest chain. I see you there, Nick. I'm like putting pressure on him because I need you to perform. Don't be the anomaly. I'm trying to like be like I can teach anyone. And guys, like, anyone can do this. You just have to be dedicated. And if you don't have that dedication, you're not going to be able to do it. And that's like the brutal truth. But most people don't want this. They don't want to make $40 days. They want to make fucking $500 on $1,000 account on a daily basis. They don't realize you're risking 250 at the very least to make that. And guess what happened? They just end up blowing up their account and you just give up. And everything you just worked for, all the effort goes down the drain. Just remember that. Everything you did. Like, I know how hard I work and I know how hard most of our members work here. So imagine, like, it hurts me if I thought about all the stuff that I did to get to where I am, and if I just blew it, like, that is the most retarded thing I could do to myself. I would not be doing myself any justice, and I'm pretty sure if you guys looked into it, and the guys that are hustling, they'll also be the same way. It's like I did this much stuff just to like blow it up because I didn't have any discipline. And if that is a factor, guys, just paper trade for now. The money will come. The money will be exponential. It's just you have to get your strategy, your risk tolerance, everything under control first. All right. And there's probably some questions I missed. Do you guys have any more questions? If I missed a question, just post it back down there. Oh, and Nick, I know you're going harder. I see it, buddy.
We had a question earlier. Should you take breakout?
Breakouts? They're risky.
Yeah.
That's the riskiest one because your stop can be really tight. Like, what if it breaks out, comes back down to like like right before the breakout, just tanks. But like when you see a breakout, usually it's like I'm thinking of a flag breakout where price moved up, consolidated, and then it rips. So if you buy it on that breakout, your stop loss is going to be underneath the consolidation mark, like so the bottom of the flag. If you have a stop loss there, you're probably exposing yourself to like 3 or 4 times more risk than if you just bought it at support, right? So I find it's better to have a proactive entry. If I see that this could be a potential flag breakout, I buy it at the bottom of the flag instead of just buying it right when it's starting to break out, because we've seen that. We've seen stuff break out and then moments later come right back down. Like that Tesla chart that I just posted, that's a prime example of this.
Absolutely, I completely agree with you. Actually, I have a chart that I charted up that shows like kind of a proactive entry situation. Do you mind if I?
Yeah, go ahead.
Because I saw that question earlier a couple of times.
Beautiful. So this is something I taught like our dream team, where like why my success rate is high, why my like win rates and like I make way more on my winning trades than the losing trades. It's literally this: I buy when I see a formation and I already have an opinion. If I'm going to be long biased on a trade, there has to be a reason. So it's usually fundamentals. So if fundamentals is my reason, I see the stock, I don't know what happened before that day, but you can see, I don't even know if it's a stock, maybe it's just SPY, but yeah, it is SPY. Okay. So you can see that price was kind of like hovering around pre-market. We got that little range, which is like 242 to about 240. There's some buyers there. Now we broke underneath that range. We tanked all the way back down to 237. And then we saw immediate buying support coming up. And that was a strong support. It held it, it moved up, we consolidated, we broke out, and look at the volume. That volume was consistent. So when we pulled back down, we hit that mark where it's like, the moving average mark. I don't know which time frame you're using, but there's like a line there. So I'm assuming it's a moving average. You can see on the chart where Cypher also noted the RSI. So you get that RSI bounce. It came back down. This time, the RSI was pretty much at the same place, but now it's at a higher price. Those are entries I like. If I think it's going to continue, I take that entry. Because here's the thing: at where it says number one, you take the entry. Where it says number two, you take half off. Where it says number three, well, if it breaks underneath number three, then I usually just cut the trade. But let's say it doesn't break under number three, you'd kind of just follow that trend till number four there.
Yeah, and this is kind of the thing with breakout trades. There are a lot of breakout traders, and I think there's successful ones too. But kind of what TJ is saying, well, you can see it right on the chart. That's a perfect example. I see that every single day. Like it'll break out really fast. It fails. It comes back, retest, and then usually it takes off from there. Not always. And so, the proactive entry is number one. This kind of goes back to FOMO, right? If you take the breakout trade and it comes back, are you going to feel good? If you FOMO in at any point, are you going to feel good? If you miss the trade completely, you can take number three. Like that's not a terrible setup. One is better, right?
Exactly. Like the best risk to reward trades is buying at support. So why can't you do that on your breakouts too? Um, I guess we could do a lesson on that too. But realistically, just buy at support. If there's a trend, if there's a chart pattern, there's always a support level on that chart pattern. You want to buy it there. When I look at double bottoms, I don't buy it at the neckline. I literally buy it like at that double bottom like peak, right? Or double top, whichever one. I expect it to do something. And that's the whole concept of trading. I know I say, hey, we don't predict what's going to happen. We don't. But based on previous data and based on my opinion, because of a fundamental reason, or there's volume, there's a reason for it to actually go up in one direction or the versus the other, if I believe in that reason. Now it's easier for me because I have fundamental skills and technical. For a new trader, it's going to be difficult. So that's why I always suggest like just stop out if it doesn't work. For me, I'll stay into trades longer just because of my fundamental biasness, whether it be on the market or whether it be on the trade. Another like thing you'd want to do is match the chart pattern on the stock you're trading with the market. If the market's pulling back too and it looks like it's at a good support level, then take the trade on whichever trade you're taking. And that's why we like large caps. If we all we have to do is trade in the direction of the market, and literally, like when you trade those large caps, you have such a significant odd that it actually astonished me how easy it became once you learn it. And not just that, the scalability. We can trade like large sizes. I wish there was a trade like LK every single fucking day. Believe me, I wish there was, but there isn't. There's like that kind of volume we probably won't see for a long time, right? Just mark how much volume came into that trade at $4. It's ridiculous. Not at $4, but the entire day. It was a lot of volume. I think it was like 80 million, right? I forgot how much it was, but that's a ridiculous amount of volume, and that was like way before like 12 p.m. I mean, 80 million. There we go. So I wish every market was like that, but what are you gonna do on the days that you don't find those kind of trades? You know what you're gonna do? You're gonna chase something, thinking it's gonna be the same, and end up losing. So yeah, that's pretty much everything. I think we covered everything we have to for new traders. And guys, please take your time to go over the new traders program. Everything I posted, all of those resources that I posted here, all of them I got from the new traders program. And that's the first place every trader should start, because we put in a ton of hours. And believe me, as a new trader, that's all these questions. That's exactly what everyone asks for. So that's why we kind of put that together. And it's not just that channel either. There's new traders program, knowledge is power, and Soya's newbie guide. The newbie guide is like, if you're like brand new to trading, don't even know how to do orders, newbie guide is where you should go. Yeah, and I don't mind answering questions, but please guys, don't give me questions like, should I buy this? Why? I don't know. What time frame are you trading on? Like, I don't know your stats. I know how Cypher, Gabe, like all of the guys on pretty much our executive team, I know how they trade. Some of the guys on the junior associates as well. So when they see a trade, I kind of know, okay, this guy's a scalper. He's gonna want to get that quick buck in. He's fast in his executions. I can say confidently, yeah, it's a good entry. You can take a scalp. Um, I know Ingo is gonna try and like hold on a little bit longer, and he's playing a lot of options trades too. So for Ingo, I'd be like, okay, maybe there's a better entry for you. For Gabe, I know his strategy, so it's kind of easier to guide people that I know. When it's someone that's like, I don't even know your name, and you're trying to ask me like, if I should buy it, it's like, yeah, maybe it'll go up 10 cents. If that's what you're aiming for, sure, buy it. But I usually try and just avoid that question altogether. If you want to ask the right question, it's, hey, I think this stock looks good over here, over this level. What do you think? I want to buy it for a day trade. Based on that, you gave me information. I'm able to be like, okay, I see it too. Yeah, it's not a bad one. I'd put your stop really tight, or I'd loosen up the stop loss a bit because I think it could go lower. And I'll give you a reason behind it. Yeah, and exactly. We're trading too, right? We're trading live. That's how we make our money. So it's going to be impossible to go into like really in-depth conversations about it. Um and the other thing, if someone's like, "Hey, should I close this position?" Like, I don't have any information. I don't know what your entry is, what your target was, why you bought the stock, that sort of stuff. Please don't do it. And if it's a simple question, guys, that anyone on YouTube or a Google search can answer, first resort to that, please. like we're here for you. It just like for us, it's like we can teach you strategy. We can like literally hone down your skills and make you as perfect as you possibly can. But it's just a waste of our time if we're like wasting that resources of perfecting traders on just telling you what is a put and call.
Yeah, it actually is very frustrating for, when we try to give a lot of time and there's some people that just want to be spoon fed. I mean, we might as well push the button for you, which we're not going to do.
Yeah, if you want to be
So
spoon fed, just there's a lot of paid pump groups out there. They'll do it for you, and if that's the route you want to take, happily take that. But again, that's up to you. If you want to work as a team, if you want to be the best, if you want to be able to trade without paying anyone and actually like be the best you can be, this is the place you should be. And if you want to learn, of course, and grow. But yeah, we're not here to make calls. That's not what we do. We'll share our trades. That's pretty much it. And you guys know, I'll let you guys know if I see something. Like if Johnny's in a trade and he's going in one direction, I always message in the group. Even if I can't talk, I'll be like, Johnny, I think it's weak. Or you'll hear us throughout the day. We try and help each other out because we know our strategies and we're a team. That's totally different than if you're new and you just took a shitty play on Boeing like that other dude from Barstools.
so there's some questions coming up about people if they can continue to post charts. We can give you guys a few charts and a few examples and stuff. We don't mind doing that. Because it's a lot of background work that Cypher's done and quite a few other people. Um, but if you want to, this is kind of a dialogue towards the same thing we were talking about before. You hopefully we can throw these out there so you guys can learn. But if you don't know the basics, all this is going to be jungle jargon anyway.
Yeah, and it's
So
kind of insulting. You had to think about it. We spent so like, I've actively made Johnny and all these other guys tell you guys on a consistent basis to be careful on trades. Don't follow people on trades. I've also made them to not like alert penny stocks. Like if you're gonna alert a penny stock, alert it when you enter it. Don't constantly alert it, right? Like we made a lot of rules to try and make sure that stuff doesn't happen. Obviously, some things are out of our control. But if you don't follow those rules and then you end up with a loss, it's like what can we do? You've already lost the money. There's not much that we can actually do if you haven't followed your own rules. So that's really important too. And if you don't spend the time to research, right, just think about it. It's so insulting for us. We just put so much hours, so much content out to help the public, and you guys can't even get your shit together and read the material that we've prepared for you, right? It's literally insulting.
very, very true. Especially when we put in all the time and make something, put it together, and then advertise it. And the questions come up that are directly related to all the work we put in, and you guys couldn't even read the title of what we put on there. So it's almost instant ban worth, in my opinion.
Yeah, and we're reluctant to help. Like I will help anyone that helps others. That's the one thing. I'll promise you that cuz one thing about me, it's like there's not a lot of good people in this world. I want it to be the difference. And we have to lead by example. You have to be the change you're looking in the world. And in a cutthroat environment where everyone's just trying to take your dime, we want to be different. Luckily for us, we've found and fostered like really great traders that help out whenever they can, and we now have a community. Like I can actually, in the beginning I was like afraid to even take a vacation because I didn't want to come back with so many people having losses. Now I can comfortably take 3 months off because all these guys have my back, have the group's back, and they'll always like work with one another. So it's amazing. It's not just me. This is a huge team effort. We have put so many hours into this. We don't have to do this. We're not fucking getting paid for this. No one is. We're just volunteering all this time because we can all grow together and we see the importance of working as a team.
Here, here.
It would be nice to have you guys on voice chat a lot more, Gabe, because it's getting boring for me. Usually it's just me
I
talking
know,
and then
buddy.
Johnny just leaves and it's like shit. It's like I'm talking to myself the entire day.
Yeah, and
Yeah,
you know
that's
what?
how it kind of feels
I've
like
jumped on
sometimes
voice
too.
after you guys requested me to come on, then everybody bails. I'm like, what the crap?
Yeah, right now it's pretty tight for me, but hopefully, when this coronavirus is gone, it'll be better.
So recently, I've actually been grinding quite a bit harder, and I try to really try to stay focused. And if it's chop, I don't want to make calls that are garbage calls, that are
Oh,
only
not
worth a
calls,
small range.
not calls. We'll just like talk to each other.
Oh yeah,
It's
we
so
could
boring.
totally do that. I mean, I gotta, I'm grinding right now, so I'll definitely break away and help out. But I'm really trying to put in the work right now while the market's hot.
All right, thank you. Appreciate it, Gabe.
But yeah, I'm usually off in the background anyway, so sometimes I got my
Yeah,
music blasting. I mean, there's there's lots of stuff going on.
like my day is never complete unless I get one of your Arnold and you know, what do you call it? Impersonation?
You know, my
Impressions.
mom
That's the
said I
word.
would be good at something. I didn't realize it'd be something like that.
Bro, you're so good at it. Like if you actually said like an entire line at the beginning of when we're streaming, YouTube would pretty much probably be like, we're copyrighting it.
Dude, that's funny. Right on. Well, I'm glad I can bring smiles to people's faces. Hopefully we can do something like that scenario and bring money to people's homes.
Hey,
But
Gabe.
yeah, go ahead.
Less talk, more Arnold.
Don't talk to me like you know.
Right?
Ah.
Say the same thing you said, but in Arnold. What's it called again? I'm gonna just call it impression. Oh yeah, impression.
Arnold Impressions.
Impressions. Yeah.
But yeah, I'll jump on a little bit tomorrow. Sometimes I don't like to chat too much lately because as soon as I start chatting, I enjoy it too much, and then I completely stop trading. And I'm really trying to stay regimented right now. But you know what? I'll do it for you, buddy.
All right. Appreciate it. Yeah, and guys, I hope you learned a lot. Hopefully, I never have to do this ever again. But now you guys know you have odds stacked against you. There is ways you can overcome it, and that's literally by risk management. You guys have live examples of people that I personally trained, so I've actually followed their progress. You know that it didn't take 5 fucking years. They got their shit together within 2. Some even less, like Cypher. He just he like within a year he was making 40K trades, you know and yeah, like you guys pretty much know everything. We have so many brilliant traders, large account sizes. There's a reason why we trade together. It's because it works.
And because it's fun.
Exactly.
Exactly. Yeah. And you know, hopefully we can throw in a little bit of fun here and there because life is too short to stay serious all the time. But definitely, you got to grind and in order to play hard.
Yes, sir.
And market, you ever get that mic?
I swear, Mar, I'll send you a mic. Bro, how do you
That's
not
like
have a
going on
mic?
2.5 years. We're gonna send that mic.
I know it's an excuse.
It's probably an excuse because he sounds gay.
Yeah, Mar.
No,
Get
it's
him,
We're gonna
Mike.
probably
Get
come
a
up with
girl.
him.
reasons why you're not on voice.
There's only 2 reasons. One, it's a girl, and we've been calling Mar a guy the entire time. Yeah, like what if it's Martha or Marla? That's 10, by the way. Shoot, it's probably Martha.
Oh
Or
crap!
yeah,
You cracked the case, TJ. Martha.
wow, I knew
Maria.
it. Maria, knew
Oh.
it. Okay,
There
I
you
didn't
go,
know the
Mar.
name, but
Is
yeah.
that you with a mic?
Dang, don't be shy. Like, you guys are like family. So if anyone makes fun of you, I'll fucking kill them. No, not kill them. I'll just ban them from the group. So don't be shy.
Listen
Get
to
on
me.
voice.
I gotta pick on you all I want. Whee!
I knew it. See my analytical skills? Oh yeah. No problem, guys. Yeah, I'm gonna get off too. That lesson took a lot longer than expected, but I hope you guys took a lot of information. Because it's recorded, we'll probably clip it, and you guys will be able to resort to it. For on a rainy day.
I do want to give out so people that grind a lot. There's a few people in here that sometimes don't get recognized for all the grind that they do, and we can give a lot of grind efforts to the administration here. There's only a few members and admin, but they're the ones that have the oversight with everything that goes on in here. And there's people that put in way more hours in the admin area that really baffles me sometimes, because there's so much. I mean, it's hours and hours and hours upon just free volunteered efforts to try to help everyone else here succeed. And I hope it's recognized. That's Johnny. That's TJ. I know Soya pops in once in a while, but there's so many hours that are just straight up designated to you guys, and I don't think it should be taken lightly. I mean, that's that's someone's lifespan they're giving to you. So anyway, hope you guys recognize that.
Thank you. I appreciate it. And yeah, it's not just us, like so many guys, like especially the executive teams. They put in so many hours into making this successful, like to get to where we were. So I appreciate everyone's help. Like this is a group effort. And yeah, hopefully you guys will learn, grow, and share your ideas. We all